In the next 5 minutes, I'm going to tell you why I think shares of Snowflake could return more than 200% over the next few years and why it's one of my largest positions. As always, I share my portfolio transparently right here on YouTube. We're building this up to be a $1 million portfolio. So subscribe to the channel, like the video, and help other people find it if you like that content. Here's the portfolio right here. Portfolio value is about $46,000. We're up almost $1,800 today, and that's a 4% return on the day. And right here, you can see my top positions. CrowdStrike and Snowflake are battling for number one, really Datadog too. They're both all three of them are around $6,700, $6,800 positions. Today, we're really focused on Snowflake, and it's up about 1.4% today. So we're having a great day today. Let's be fully transparent here. Portfolio is down about $16,000 since February 15th when I started it this year. Ignore this number, 15,000 divided by 61,000, which is what we've put in, is not 57%. It's more like 20, 22%, something like that. So we're down around 25%. As you know, if you've been watching these videos, I'm not worried about that at all. We're adding money to this portfolio every month. And so I am not at all concerned with being down $15,000. This is not money we need for at least the next 3 years, unless things go totally crazy. Things could always change, obviously, but the plan is to keep this money invested long-term. That's what I talk about here on this channel. Subscribe and like these videos if you enjoy that type of content. If you're just looking for crazy day trades, stop watching now. It's not worth your time. You're not going to get that stuff here. All right, here's Snowflake, and here is the value of the position over time. We got a $6,700 position. We're down about $1,800 on that position. Again, it says it's down 55%. That's not accurate. And this position alone today is up about $60. We own just over 51 shares at an average price of 167 a share. The market cap is about $37 billion. They do report earnings this afternoon. I'll cover earnings in a video tomorrow. So just let me know in the comments if you want to watch that video. And there's no telling. Snowflake could drop like crazy after earnings today. It's impossible, in my opinion, to know what's going to happen, after earnings. But I own this company for the long term, and that's what I'm going to cover here. This is commonstock.com. There's a link to this memo I wrote on Common Stock down in the description. It's a great resource where there's a ton of great free investing insights. You can connect portfolios, which I have mine connected and verified. Tracks things like buys and sells. You can share your thesis. And so that's what I did. I wrote up a memo on Common Stock. First link in the description if you want to check this memo out directly. We could do predictions on there, which, I did a short-term prediction, which I think is kind of fun, and it's probably wrong. And it's kind of bold and ambitious. I think Snowflake has the potential to be $156 a share after earnings. This is not a real prediction. I'm not saying this is going to happen. I did this for fun. It's a horrible idea, but I'm doing it anyways. And the truth is, this is really about what I think Snowflake could do over the next 8 years. And that's how I invest. At their investor day in 2021, management established fiscal year 2029 targets of $10 billion in product revenue, 1,400 customers spending over $1 million a year, not $1 billion a year. And then in fiscal year 29, management expects to be growing product revenue at 30% year over year still. So 30% revenue growth, 75% gross margin, 10% operating income, and 15% non-GAAP free cash flow. And so here's a slide from their investor deck. It shows in fiscal year 21, they had 77 customers with over $1 million in revenue. They're expecting or targeting 1,400, big change. Average product revenue per $1 million customer, currently 3.4 million. Their target is to get that up to 5.5 million. And then percent of product revenue from over $1 million customers, currently 47%. They're expecting to get that up to 77%. That all equals product revenue growing from $554 million in fiscal year 2021 to $10 billion in fiscal year 2029. So how are they going to get there? And what does their long-term model look like? Again, here's the target, fiscal year 2029, $10 billion. They're expecting 30% product revenue growth at the time. In fiscal year 20, they grew that 164%. Fiscal year 21, 120%. And then I think in fiscal year 22, it was around 108% or something like that. It's not in front of me, but I did a video on it if you want to look back through my Snowflake videos. Non-GAAP gross margin, they expect to expand from 69% up to 75%. And then this is how they're going to get to that kind of 10% operating income and 15% adjusted free cash flow. They're going to keep S&M expenses at about 40% of revenue, R&D expenses at about 15. That's down from S&M at 63 right now and R&D at 23 right now. So both those dropping. Non-GAAP general administration expenses, 17% currently, getting that down to 10. And all of that gets them to, an improved operating income from a loss of 38% in fiscal year 2021 to 10% operating income in fiscal year 2029 and 15% adjusted free cash flow. The stock has sold off a ton in the next 12 months. EV to revenue has come down from 58 in July to 18 right now. That is enterprise value to sales. And so what that looks like, and this is data from Ticker, TIKR.com. Back in July, this is insane. The next 12 months total enterprise value to revenues was 58. It has dropped and dropped and dropped, and we're now at about 18. In fiscal year 2021, Snowflake grew its revenue 123% year over year. In fiscal year 2022, they grew at 106%. The estimates are for 66%, 55%, 50%, 55%, and then 36% in fiscal year 2027. And so analysts think that Snowflake's actually going to get to that $10 billion revenue number before they're projecting. They also have them forecast to be at about 9% net income margin in fiscal year 2027, with adjusted earnings per share of $1.99. With that, here's fast graphs. I love using fast graphs here, but this shows what the return could be through fiscal year 2028 if Snowflake hits analyst expectations for revenue. I personally think that even those revenue estimates might be conservative. We'll see what happens in terms of a recession, stuff like that. But this is what it looks like if their blended price sales ratio gets to 10 in fiscal year 2028, which is down from 27 today. Shares would be $380, which is a 193% total return and a 21% annualized return. So the question then becomes, will they execute? And so, sure, these potential returns, the price is cheap. Management has set these lofty expectations, but it doesn't matter if they don't get there, right? And so then we have to judge management. And so what we do know is that Frank Lieberman and his CFO, and I think some of the other execs there, were excellent at ServiceNow. They turned that business around, and now it is a fantastic company due to good management now, but what they had set up and the conditions they had set before they left ServiceNow and came over to Snowflake. And Snowflake is already tracking above those ambitious 2021 Investor Day targets. Here's a quote from the CFO, Mike Scarpelli, at the JMP Security Tech Conference on March 7th, 2022, that shows how they're already exceeding those expectations. And for context, this is when he was asked about some cost savings that they're able to pass to their customers through efficiencies that they've created with their platform, which is creating a negative impact on their revenue because the product that their customers are paying for is more efficient, and therefore they're spending less money for the same services and the same level of service because Snowflake made the platform better. What management thinks is that by doing that, they earn trust and credibility and more business from their customers that far outweighs that temporary loss in revenue that they're getting from this one product improvement. So that was the basis around this question. And then it was, why did the stock go down so much after earnings? Because this call happened after last earnings. So here's what he said. This is the first time we ever guided to 2023 and beyond that we gave at the 2021 Investor Day, which, by the way, at the time we said we're going to do 1.68 in 23, just guided at 1.9 at the high end. So talked about that. But here's how we answered the question. What a lot of people don't understand still in the consumption model where you're selling software, and as the software gets more efficient and when the hardware gets more efficient, there's savings because you're able to do more within that credit you're purchasing, talking about their customers. And I don't think when I reminded them that there's going to be about $100 million headwind, which back in May 2021 on our conference call, if you listened to, I actually told people there was going to be this headwind in revenue in 23. So I think that's what they didn't like. And I don't think people focused on that. We had extremely strong free cash flow. I think it was actually 27% in the quarter for the full year. Remember, when we started the year, we actually said we were going to be cash flow break even. We did $140 million in free cash flow, guiding to 15% free cash flow next year while they're still growing. And so that's really it. The company's outperforming management and analyst expectations. We've seen strength from other public cloud providers. Snowflake reports today their multiple has come down big time. But for me, all of this equates to my highest conviction position with a 3+ year holding period. I'm going to monitor execution along the way. And hopefully that explains why Snowflake is one of my largest positions. If you want to get that video of the Snowflake earnings review, make sure you subscribe to the channel so you get notified when that video comes out and you never miss any of my updates.